Greetings, members, one and all of the Salivation Nation. Well, we're seeing a rally in the stock market, but gold and silver are still holding their own. This article here from Market Watch discussed this. Gold has ended another multi-month high, but U.S. stock market rally limits the metal's rise, and silver has ended lower after a three-session climb. Gold futures edged up Tuesday to mark another finish at their highest since July, but a rally in the U.S. stock market limited the gains for the precious metals. Let's take a look at the prices for gold and silver. All the metals are down slightly, but not to where they were before that big drop last week. And my guess is probably that huge drop probably spooked it enough that we may not see those lows again for the rest of the year. But it's really anybody's guess, and be interesting to see. But gold's here at hovering around 1225, and silver's at 1468, almost 1470. Platinum is holding stable, pretty much the same. Palladium has dropped $7. It's kind of the biggest mover here. But nonetheless, against a backdrop of relatively stable trading for a leading dollar index, December gold rose 70 cents, or less than 0.1%, to settle at $12.31 an ounce. Prices had pulled back from a high of $12.35.90, but that settlement was still the highest since July 31st, according to FactSet data. Silver futures moved 0.32%, down 2.6 cents, or 0.2% to $14.70 an ounce for December futures, easing back after a posting climb in each of the past three sessions, so it's staying pretty stable there, under $15. Gold lost some of its investment appeal at the U.S. benchmark stock index has moved up sharply Tuesday, a day after technology-driven retreat. Stocks have been highly volatile amid mounting concerns over rising treasury rates, stirring interest in haven gold. A rapid climb in rates also has coincided with the weakness in the U.S. dollar, which has helped to remove a headwind for the precious commodity. Gold tends to gain when the dollar is weaker because the assets become comparatively more attractive to buyers using other monetary units. One popular measure of the buck, the ICE dollar index, DXY, was nearly flat at 95.029 in Tuesday dealings. The dollar is just in the red for the month of October so far. Recent dollar weakness has defied the stronger trend and has persisted in the buck for the year or so, a rise fueled by monetary policy tightening at the Federal Reserve. The popular U.S. index is up 3.1% so far in 2018, according to FactSet. The Fed has hiked interest rates 3 times this year and may do so a 4th time before year end. I don't think we're going to see it now. I'd be very surprised if they raise rates unless the stock market just explodes and reaches above the previous highs, record highs above 26,000, which I don't see happening. It could, but I kind of doubt it. It could be level, and it could be that big drop was just a correction, and the markets will continue to slowly creep their way back up. Although my guess is before the end of the year, we're not going to see the record highs that we saw before that big crash. Minutes from the FOMC committee's September rate-setting meeting will be released Wednesday. And overall, rising geopolitical tensions and pessimism over the prospect of global economic growth is supporting the price of gold, said Naeem Aslam, chief market analyst. Think markets. Traders are hedging their bets, and rightfully so. We think the price of gold is heading towards the $12.50 mark now, and which is way off the mark from my prediction, which was it was going to get close to $1,400. That's looking less and less likely as the months move ahead. And my $20 an ounce prediction for silver is looking a lot less likely to occur as well, which is fine by me. If I'm wrong there, that means that we can purchase more gold and silver at these lower prices. Let's see here. So very good. Gold is up 2.8% so far in October, trimming its year-to-date drop to close at 6.1% based off the most active contracts. And the rally began when the mood among gold market timers was already surprisingly upbeat. According to contrarian analysis, this means that the current rally is likely to quickly fizzle. Yeah, so we could see lower prices moving out to the end of the year, and some of you have predicted that consistently. here, and you're holding fast, and that's good. I love it when people, for one reason or another, post what they think the markets are going to do. And so far, those that have been bearish on gold and silver have been right so far. And but nonetheless, we'll see. But I do think that, and I'm probably, even they would probably say that now that that we probably have seen the low. They probably don't disagree with me that we've probably passed those lows, even though it may trade sideways from here on out to the end of the year. We probably won't see those lows that we saw earlier. In other words, silver just below $14 an ounce, and gold below 1180 an ounce, because I think we've seen some new ceilings or floors that have kicked up here with this newest rally, and other things going on too. It's not just that. There's other factors that come into play that can affect the dollar index, and the dollar index is the thing that's we seem to be the best barometer for gold and silver prices, is that dollar index. We'll see how that plays out. Now, and again, as I've mentioned before, it's not the sole thing. There's other things that could occur that could cause the gold and silver to go up with a strong dollar, with a dollar index high. But for the most of the time, it is this dollar index. So post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching. Exciting times, and as is with any case, we will continue to accumulate as we can afford. I'd like to extend a multitude of gratitude to you all and encourage you to please rate, comment, and subscribe.